Jupiter is the biggest aggregator on Solana and one of the most important apps in all of DeFi. It has over $1.2 trillion in cumulative volume, becoming the primary place for trading on Solana, and a token that sits 90% below its all-time high. So what's the Jupiter story? How does the dominant infrastructure layer of the fastest growing blockchain in crypto trade at under 20 cents today? That's what we'll find out, guys, along with the math on how many JUP tokens will make us millionaires when Jupiter goes to the moon. Let's get into it. This is not financial advice, always do your own research. Jupiter launched in 2021, founded by a pseudonymous builder known as Meow, alongside co-founder Seong. Meow had previously advised InstaDApp, Kyber, and Blockfolio, which were some of the most important DeFi projects of the previous cycle. The goal at launch of Jupiter was pretty straightforward. Aggregate every liquidity source on Solana into the best possible swap for the user. It worked. Within a few years, Jupiter became the default entry point for trading on Solana. When the network exploded in 2024 and 2025, Jupiter was the engine routing most of the activity. Over $890 billion in spot volume processed in 2025 alone. But in January of the previous year, 2024, Jupiter launched its governance token JUP and ran the first JupUSD airdrop. 1 billion tokens distributed to over 1 million wallets, worth approximately $2 billion at peak prices. It was one of the largest airdrops in crypto history, and I was fascinated to see it. But Jupiter's ambitions moved well beyond aggregation. Today, the product stack includes perpetuals, limit orders, dollar cost averaging, a lending protocol, and JupUSD. The latter is a yield-bearing stablecoin launched a few months ago in January of 2026, and it is backed 90% by USDTB from BlackRock's BUIDL fund and 10% by USDC. That's to say, Jupiter is no longer a DEX aggregator, guys. It has become Solana's DeFi super app. What's next is the Jupnet. That's Jupiter's own omnichain network that aims to aggregate all of crypto in one single decentralized ledger for maximum ease of use for users and developers alike. In terms of tech, Jupnet is built on a custom virtual machine using Solana's open source SVM code. The vision is pretty huge as it gets. One account, all chains, all assets, no bridges. The public testnet launched in Q4 of 2025, and it connects Solana, Base, Sui, and Arbitrum. But after the testnet announcement, there were not many updates. Community members started asking, when are we gonna see Jupnet in action? Then on May 19th, just recently, co-founder Seong posted on X, the next update will be a live launch, we are close. Safe to say, Jupnet is about to drop any day now, so we're waiting patiently. Looking under the hood, Jupiter's tokenomics tell a story of genuine improvement. The original max supply was 10 billion tokens, but later the community approved burning 3 billion tokens outright, and it was done at Jupiter's Cat Istanbul conference in Istanbul in January 2025. To symbolize this, the guys there burned a 20-foot cat structure, and I can tell you it was spectacular to see in person. And so the max supply was reduced to 7 billion permanently, which is a 30% reduction in potential dilution, any way you look at it. At Cat Istanbul, they also announced a 50% buyback plan, and the price rose 40% instantaneously. Fast forward to today, and the circulating supply sits at approximately 3.32 billion tokens. And at the price of 18 cents per JUP token, the market cap comes up to approximately $600 million. Here's an interesting piece though. In November, Jupiter had announced only 200 million tokens will be allocated to the 2026 airdrop from the 700 million approved by the DAO. But then came the most important vote in Jupiter's history. In February 2026, the DAO voted to implement zero net new emissions. Here's what it means. First, postpone JupUSD and return the 700 million tokens to the community called multisig, preserving the initial airdrop snapshot. Second, pause team token emissions indefinitely, with any liquidity needs absorbed directly by Jupiter's balance sheet. And third, accelerate mercurial vesting and offset any sell pressure by purchasing an equivalent amount of JUP. This package is designed to drive net new emissions effectively to zero for the foreseeable future. By stopping token issuance, Jupiter removed a steady source of sell pressure, and that's generally good for holders. But there's frustration too. Users who expected tokens are still waiting with no clear timeline, and part of the community was left bitterly disappointed, unfortunately. The ongoing value accrual mechanism is the buyback. In November 2025, the community voted to receive 50% of Jupiter's on-chain revenue and to buy back JUP. This is live and trackable in real time on Blockworks Analytics, and so far there are more than $800 million worth of buybacks, with this buyback mechanism actually being continuous and compounding. Staking yield currently runs at approximately 21% APY, with nearly 945 million JUP staked across 367,000 stakers. And what I like is that the 30-day unlocking period creates natural holding pressure. When it comes to the network's performance, the numbers that Jupiter is putting up are not theoretical. In fact, they are among the most verifiable in all of DeFi. Just look, Jupiter processes approximately $1 billion in daily aggregated volume, ranking it first amongst all Solana dexes. That's ahead of DFlow and OKX dex. The total value locked sits at nearly $1.5 billion today, but at the peak in September of last year, TVL reached $3.7 billion. In terms of growth, the product stack has expanded dramatically. Jupiter Lend is at over $800 million in TVL. So far, Perpetuals trading has brought in over $200 million of profit. Then, the RainFi acquisition brought peer-to-peer lending to the platform as well. And JupUSD, the new yield-bearing stablecoin backed by BlackRock's BUIDL fund, is now live and integrated across Solana DeFi protocols. One more interesting note here. Meow appointed a president of Jupiter, the former KKR executive named Zhao J. Zhu. And his thesis is that value in crypto is shifting from infrastructure to the application layer. What matters going forward is liquidity, distribution, and user experience. So Jupiter is now positioning itself to capture that shift. But the honest picture also includes the risks. And as much as I like the Jupiter community, I have no intention of sparing you these. First, we have the Solana dependency. Jupiter's entire product stack runs on Solana. So if the layer 1 loses market share, has network stability issues, or faces a major exploit, guess what happens to the Jupiter as the layer 2? No fallback. That concentration risk is real. Number 2 is traditionally the post-airdrop user retention. Jupiter spent over $2 billion in token distributions, building its user base across 3 Jupiter events. Those airdrops are now over. So every Jupiter holder has to figure out for themselves whether the product stack alone, without token incentives, can retain the users that airdrops attracted. The third risk I'm wary of is the super app execution risk. Jupiter is simultaneously building a stablecoin, a lending protocol, a P2P offer book, a perpetuals platform, and an entirely new omni-chain virtual machine. Each of these is a large technical and product challenge on its own. Executing all of them well at the same time is an extremely high bar. And the fourth risk has to do with the token unlock pressure. What I mean is that while the JupUSD program has ended, 300 million JUP is still reserved for Jupnet development. As Jupnet launches and matures over time, those tokens will have to enter circulation. So don't forget that. Now let's go check a bit of the price history before we explore the Millionaire math. JUP launched in January 2024, and shortly after, in April, it hit an all-time high of $1.80. Since then, the price has been selling off, hitting an all-time low of approximately 11 cents in the infamous October crash. The price tried to recover, going to 45 cents, but then it dropped again with the overall market. Right now, JUP is trading at around 15 cents, and that's the price I'll be referring to in the Millionaire math. Kicking things off with the bear case, where one JUP token trades for 50 cents. That is a 3.3x from today, as JUP simply recovers to a fraction of its previous peak. With the Solana activity stabilizing and the buyback program compounding, the projected FDV goes to about $3.5 billion. For $1 million portfolio with JUP, you need 2 million tokens, costing roughly $300,000 today. Moving forward to the bear case, that spells a nice round $1 per token. That would mean a nearly 7x return from today, forming FDV of around $7 billion. Tell you what, this figure is in line with the mid-tier DeFi applications of today. The math is quite simple. 1 million tokens at $1 a piece and you reach that millionaire status for the cost of around $150,000 today, which is not bad at all. Here's the cherry on top, guys, of our millionaire math. The bull case scenario that calls for the stupendous $2 per JUP, which is reclaiming its all-time high. Over 13x from here, boosting the FDV to around $14 billion. In this most optimistic scenario, you will need 500,000 JUP tokens, costing you approximately $75,000 today. Now here are the 4 factors that could send Jupiter to the moon. First, the mainnet of Jupnet. If Jupiter successfully launches its own omnichain, then captures the cross-chain volume the way it captured Solana DEX volume, this makes it a completely different asset. Second factor, the fee buyback compounding. While daily fees have recently dropped to around $200,000 average, the math can get quite interesting quite quickly once the volume starts recovering. The third driver of JUP to the moon is the JupUSD adoption, a yield-bearing stablecoin backed by BlackRock's BUIDL fund built into the most used DeFi platform on Solana. How's that for a product market fit, guys? Growth here drives fee revenue, which drives buybacks, which drives the price up. And finally, we've got Solana's continued institutional momentum. Every new user, every new app, every new institution that builds on Solana routes through Jupiter. I know it's not easy to realize this, but Jupiter benefits from every single dollar that enters the Solana ecosystem. So here's the puzzling part. Jupiter built the routing layer that made Solana DeFi work. It has real revenue, a real buyback, and the most ambitious product roadmap of any DeFi application out there. And it still trades at 91% below its all-time high. So this could be the opportunity of a lifetime, or at least of this cycle, or could it be that the end of the Jupuri airdrop campaign proves that Jupiter's user base was more of a rental and not actually owned? I personally have seen part of the community of cadets a year ago in Istanbul. We had great chats, fun times together. They're proper folks, proper degens, I would say. But are the cadets enough in numbers? Time will tell. Now this is where I ask you for your expectations on Jupiter. The price, the developments, anything you want to tell me. Just drop your thoughts in the comment section below and I will check it out and I'll respond to it. At the end, if this video was useful to you, then give it a like, subscribe to the channel and share it with either someone who's sleeping on Jupiter or with one of our fellow cadets. I'm Stan, thanks for watching airdrops.com and I'll see you in the next one. Ciao.